So there's been a lot of attention recently in the news about investors moving away from single-family homes and toward multifamily. Now, why is that? If you're new to real estate investing, should you skip the traditional step of starting with a single-family property? That's our topic this week. Let's do this. Hi, I'm Michael Blank. I teach people how to become financially free with real estate by investing in apartment buildings. We post new videos every week, so be sure to subscribe so you don't miss a thing. There's an article recently that ran in the New York Times about multifamily movement, and people are taking notice. Both newbie and pro investors are turning their attention away from single-family investments to multifamily properties. But why? Today we're going to look at the reasons why investors are shying away from single-family investing. Now, it used to be that when people got started with real estate investing, they would begin with buying single-family homes, flip or rent. In fact, that's how I got my start. I went from flipping pizzas to flipping houses. But over the course of 3 years, I bought and flipped over 3 dozen single-family homes, and I made a lot of money, but you know what? I also spent a lot of money and, frankly, more time away from my family than what I would like. And then just as I was starting to get burnt out on flipping houses, I discovered multifamily investing, and the rest, as I say, is history. Now, if you're looking to get started with real estate investing, do me a favor. Don't buy an old way of thinking that you have to start with single-family homes. Take it from me. Skip that step and head straight into multifamily. Here's why. Number one, when it comes to real estate investing, putting your money in multifamily is a safe bet. If the Great Recession of 2008 taught us anything, it's that multifamily investing is recession-proof. Why? In 2008, more than 3 million foreclosure notices were issued to American families. That's 1 out of every 54 homes across America. Where did these families go? Many downsized their life and their monthly cost of living by moving into multifamily properties into apartments. Now, if you were a single-family investor during this period, and I know some of them, flipping house or flipping houses, your investment was at serious risk. I know people who've lost millions, during that time because they're so dependent on the market. Now, suddenly people were losing their homes, not buying them. If they were forced out of their home due to foreclosure, they certainly couldn't afford to rent a similar home at twice the cost. Now, history has shown that multifamily investing is the safest real estate investment you can make. Today, even with COVID, while other asset classes like office and retail are badly hurting, multifamily is thriving and cash flowing. Why? Because people will always pay to keep a roof over their head. And for many people, multifamily is the most cost-effective way to maintain their lifestyle. In fact, you can't build any more affordable housing these days. All right, let's move on to reason number two why real estate investors are shifting from single-family to multifamily investing or skipping single-family altogether. Multifamily investing offers a greater return on investment than most other investment vehicles. Well, flipping houses is fun, great fun, but the truth is you have to buy and sell or buy and manage a lot of single-family houses in order to earn the consistent returns offered with multifamily investing. Plus, if you're not buying, fixing, or selling houses, you're not making money. And when you do flip the house and sell the house, the money stops flowing. Now, with multifamily investing, what kind of returns are we talking about? Multifamily syndications routinely provide average annual returns of 10% or more. That's compounded without the volatility of the stock market. It accounts for fees, inflation, and yes, even taxes, okay? So when you get gains in real estate because of the depreciation, you actually pay very few taxes. If you use tax-deferred strategies like a 1031 exchange or Delaware statutory trust, you can defer paying taxes forever. So above average returns, no volatility, less volatility, high performance during a Great Recession, and tax advantages. Now there's a few ways to calculate the return on multifamily real estate, which I've laid out in another video called The Potential Returns of Multifamily Real Estate. So you might be saying, well, that's great, Michael, but why does multifamily offer a better return on investment than a single family or rental? Now, I can't speak for other investment firms, but at Nighthawk Equity, which is our company, we're able to offer a great return because of our investment strategy. We prefer to buy older properties or properties that are not performing at as high a level like some others in the area. And what we do then is we renovate those and make them nice and shiny, nice and modern like some of the other apartment buildings, and we slowly start raising the rents. We call these value add deals, and we love them. Now with a single family house, even if you're doing a flip in your renovation, you're really at the mercy of comparable rates and after repair values in a particular area. So if you renovate a house and like in 2008 the market starts going down, it doesn't matter how pretty it is, right? Because the market's going down, and so therefore it's completely outside of your control. With multifamily, to a large degree, I can affect and control the value of that by increasing the income. The higher the income of a multifamily property, the higher also is its value. And with houses, it's not like that at all, because a rental property getting higher rent is really worth the same as all the market, because you're linked to the actual selling prices of other properties. Now, money isn't the only return that's great with multifamily investing, because it offers a larger passive component than it does with single-family property. I mean, think about it. If you invest in single-family, you're probably landlording, right? You are probably managing those yourself. That's pretty time-intensive. So you're getting a return on time. But how does that work, right? Because as a passive investor in a multifamily deal, you aren't spending your time finding properties, fixing it up, dealing with tenants, and then selling it. Instead, you're leveraging the knowledge and time of expert operators, for example, like us, and there's others like us out there, to take those steps for you, but with larger commercial properties that are more stable, that are professionally managed. And all they ask from you is your money. Now, all kidding aside, really, because when you do have money to invest, you're looking for the best place. There's no better place to invest passively than in a multifamily real estate syndication, because you're exchanging your money for both not only more money, but you're also getting time. You're starting to control your time through the cash flow you're getting from those investments. This is exactly why so many busy professionals that want to invest in real estate choose to do so via multifamily syndications, rather than, say, investing in flipping, managing single family, or even investing in turnkey properties. In fact, I recently interviewed the star of the show Flipping Boston. His name is Dave Seymour, and it's a show called Flipping Boston, and two crazy guys that, of course, flip houses. Anyway, so if you want to find out more about his story about why he left flipping houses to move on to invest in multifamily, and that's really all he does right now, check him out on my podcast. Now, reason number 4 really to invest in multifamily syndications versus single family is liability, or rather the lack of it, because as a limited partner, your risk is really limited to the amount of capital you invest. But if you invest in single-family house, the liability does not end in you could lose not only all your value in it, do some kind of foreclosure, but you have legal liability if there's a lawsuit or something like that. And as a limited partner in a real estate syndication, the law actually protects you from more liability than what you invest. Finally, reason number 5 to invest in multifamily versus single-family are the trends. So there's been big shifts in the real estate market over the past 20 years, from the housing bubble burst of 2008 to the rise of mixed-use properties of the past decade. There's always new trends and opportunities in real estate. One trend that's starting to take off now is the reimagining of commercial properties in suburban areas. Now, what does that mean exactly? If you think of traditional mixed-use development, you'd imagine brand new apartment residences that sit on top of retail shops, right, and restaurants. Now, these are typically what's called Class A developments in emerging areas of town that cater to those who prefer a turnkey lifestyle like retirees and millennials. Now, this year, coronavirus revealed the need for more practical amenities for residents of these developments to have access to. Think pharmacies, small grocery markets, and even emergency rooms. Now, these trends are leading developers to reimagine mixed use, multifamily retail in suburban areas. They need investors to help them bring their vision to life, but there are some major risks with investing in brand new Class A properties. In fact, I wrote an article about this video on a topic called Why You Should Not Invest in Class A Real Estate. So make sure you check out that before you invest in any Class A real estate. But let's be clear, brand new developments aren't the only opportunities available to invest in suburban markets. There are plenty of valued opportunities that just need to be discovered and given some TLC, right? Which is what my firm, Nighthawk Equity, specializes in. So once again, the real estate market is changing, and multifamily has become the property of choice for not only novice, but also expert real estate investors alike. And we talked about the 5 reasons behind this includes, number 1, less risk. Number 2, greater return on your investment, greater return on your time, less liability, and take advantage of new market trends. Of course, the best time to start investing in real estate was 20 years ago. The second best time is right now. So what are you waiting for? So if you're new to investing in multifamily real estate, check out my complete guide to real estate syndications for passive investors to learn more and see if multifamily investing is right for you. I'm Michael Blanc. Catch you next time. Hey, and before you leave, make sure you subscribe to my channel below. We put out videos every single week and you don't want to miss it. Also, if you haven't done so already, grab my free ebook here, okay? It's The Secret to Raising Money to Buy Your First Apartment Building Deal. It's a good one, so grab that. And hey, check out another video.